Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 29th, 5:11 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in a correction. Granted, it's a bifurcated bipolar market with small caps outperforming, big tech correcting hard, the S&P 500 somewhere in the middle of that. Let's check the trend gauge over here. One thing that is consistent about this correction, though, is that growth leaders not putting their best foot forward. There were about 2 weeks ago, week and a half ago, started breaking down. A lot of the AI data center names, which had been leaders, are under their 50-day moving average. Some trying to form the right sides of bases, but you've seen us in the videos take a step back when the market is not firing on all cylinders. Uh, that's when we pull back a little bit, mostly avoid individual names, stick with sector ETFs that are outperforming, and keep reasonable exposure to the indexes while they're not breaking down. So market leaders have the red arrow. Short term, we've got the red arrow that's versus the 21-day moving average as the S&P 500 and NASDAQ 100 cannot get back above NASDAQ 100, especially not even close to it. But small and mid caps seemingly hanging in there since that's where the money has flowed to starting a little over 2 weeks ago with the CPI report. Medium term, NASDAQ 100 trapped below the 50-day moving average. S&P two closes now back above it after visiting below that level last week. Been small caps just fine relative to that level. Long term, and remember, the market never gets into serious trouble long term unless we start to break the 200-day moving average on the indexes. That doesn't mean that individual stocks can't completely come apart, as there are numerous cases of that. But a lot of rotation takes place. And remember, the indexes, half are outperformers, half are underperformers. But on the average, they stay above the long-term level, 200-day moving average. Market, as I said, doesn't get into serious trouble, and you're going to be within 10% of all-time highs, just obeying that one rule. So what happened today? Mixed action. Couple of intraday waves, but a bit of a compacted range versus the last couple of days. Volatility on its way, though, with Microsoft earnings after hours on Tuesday. Then Wednesday, we've got Meta earnings after hours, but before that, the FOMC decision and some insight into interest rate cuts. Then Thursday, after the close, Amazon and Apple report. So things are definitely going to become lively with those events on the horizon. Here are the numbers on the day. The 21 over 21 leaders list, not so good, down an average of 0.77%, 5 up, 3 neutral, 13 down. The big 8, led by Tesla, far and away the leader in this 8 stock portfolio today, on average up 0.74%. The RG8 down an average of 0.24%. S&P 500, strong overnight, opened up 1/3%, made its high within the first 30 minutes and then chopped around, ended up 0.08%. Equal weighted, did slightly better. NASDAQ 100 opened up 0.5%, couldn't do much better than that, ended up 0.2 by the close. Equal weight up 0.34. Dow down 0.1, mid caps down 0.2. Russell 2000 small caps down 1.1, taking a break from its leadership role. Global diversified 60/40 stock and bond just barely positive. Our in-house flagship portfolio, GROTECTION, down 0.12%. Let's get into some details. We'll start with the S&P 500 double inside day, which means we've been inside the high and the low of the prior day, and the prior day was inside the high and the low of the day before, in this case, Thursday. Very clear triangle tightening, and it'll break one way or the other, or it'll break one way, fake out, and then break the other. but this is a very clear signal that volatility is contracting right now. And when it contracts, get ready for it to expand. Multiple lines you can draw looking for an upside break. The important one on the downside is this 5,400 level, maybe 10 or so points below that. Really, we're kind of in that same trading range that we were in back in late June when we were trying to, right before we had the most recent breakout, which has now failed as we're back below that 5,500 breakout level. So that's the, we'll call that the middle. That's the S&P 500. On the downside, the NASDAQ 100 continues to be weak. Tight range for 2 days in a row, not a double inside day, but both of the ranges of today and Friday inside of that second big down day on Thursday. Haven't even made it up to the declining 8-day moving average yet. So we'll see what happens when we hit that level today. NVIDIA, one of the weaker stocks in the Magnificent Seven and the NASDAQ 100, hit its declining moving average 8-day today and failed at that level. And of course, we've been pointing out the relative weakness since 2 weeks ago and 2 days. Actually, it's 12 trading sessions now with that CPI report when things turn decisively for NASDAQ 100 names. Let's go to the Dow Large Cap Value Index, outperforming on a relative basis. Back above that 40,000 level for the last 2 sessions now, tight range today. Let's go to the mid caps. Not quite as strong as small caps from an overall chart pattern, but down less today. Really in this about a 2-week tight range now. On the downside, we want to see it hold this 3,000 level, which basically corresponds to the 21-day moving average. That's the green line, and a breakout from highs 2 weeks ago on the upside. Russell 2000 still holding above its breakout level at around 2135. Starting to get a bit of a consolidation. We're seeing higher lows. Tried to bust above the highs from the prior 2 weeks today at the open and then gave it up a little bit, but even down 1.1% still, you can see the extreme relative strength it's been showing over the last 2+ weeks. How about some equal weighted big cap indexes? Here's the equal weighted S&P 500, tight range today, right near its pivot around the 170 level. QQEW failed breakout here, ran into the declining 8 EMA. It's below the 21 and below the 50. Tech is not where it's at right now. Plain and simple. All right, those are the major indexes. How about some inter-asset correlation? Let's start with the VIX. Tighter range today. We want this to contract. It did a bit today. We want to see it back below the 16 and preferably the 15 level. The US dollar showed some strength today, breaking above this about 2-week range, still under the declining 50-day moving average. A stronger dollar is not good for US stocks. Let's go now to bonds. No, I'm sorry. We want to do precious metals first. Here's GLD. Not a whole lot of movement today, just down a tiny bit. GDX was down early, but rallied into and closed just barely above its flat to slightly declining 21-day moving average. This is still on our 21 over 21 list. And silver, the weakest of the three, also closed at the top of the range, but undercut the lows from last week and rallied a bit above it. Bitcoin, a lot of speculation about would it be a sell the news event with the big Bitcoin conference. It wasn't at first over the weekend, but it was today after the open as an attempted breakout failed, but still just pulled down to the 8-day moving average, down 1.2%. Not a whole lot to be concerned about there yet. On to bonds now. Broad bond index up 0.12%. The long bond PLT up 0.54%. Price up means yields down a bit, 0.5% on the 30-year, on the 10-year, 0.5% as well, near the bottom of the range on the yields. That's our inter-asset correlation. Let's go to the tail of the tape. hit the highlights here. You can pause and hit the whole thing. So 5 keys coming into today. Could the S&P get back above its 50-day moving average, or stay above it? And it did. Would the QQQ stabilize? Well, it was positive today, so let's say it stopped going down and stopped underperforming for the day anyway. Small, mid, and equal weight showing relative strength? Not really. Small caps led the way lower today. VIX pullback? No, up slightly, but volatility range did contract on the S&P 500. And we had an 80% up day on Friday. I mentioned back-to-back 80% up days are extremely bullish. Didn't even come close to that today. We'll talk about what the keys for tomorrow are in a little bit. Some news, FOMC Wednesday, I mentioned that, and then the 4 big tech earnings that will be introducing some volatility into things over the course of the next 4 trading sessions. We went from up day 1 to up 1 with a consolidation day, 4th day below the 8-day moving average, 3rd day below the 21-day moving average on the S&P 500. Expectations neutral, waiting for resolution between this pinch that we're seeing on the S&P 500 with the declining 21-day above, rising 50-day below. As far as sectors go, ITB builders, and then XLCY&U, which is communication services. Consumer discretionary and utilities led the way today to the downside. Banks and oils. When banks and oils are down, not the small caps really don't have a chance, as they're a big component of that. Biotech weak, solar weak, and XLK tech weak. Only one change to the portfolio. We took a position in Now, showed no follow up to the initial strength from its earnings report on Thursday. We stopped out on that, about a 0.1% loss to the overall portfolio. So it was 3% size, less than a 4% loss. Some keys for Tuesday. We want to keep an eye on the S&P to make sure it holds that 50 and possibly gets above the 21, but the after hours action on Microsoft tomorrow might have to say something about that, so we may have to wait on that. Will the relative weakness continue on the NASDAQ 100? Will the relative strength continue on small, mid caps, and equal weight S&P? And then Microsoft after hours earnings reaction. But the bottom line on the day, mixed action, volatility incoming with the news items that I mentioned. Let's take a look at the 21 over 21 list for this week. A few new names. Let's get to the right list. Here we go. So what got punted last week? Weatherford Square, Apple, Tesla, Hood, and TMDX. And we'll go in order. We're going to go in numerical order. So the ones that are starting here have been on the list for the longest, and the new ones will be the last few added. So we'll start off with Palantir. It's been holding up pretty well. Had a shakeout look on Thursday, hanging right around the 21. And this is probably the weakest 21 over 21 list that I can remember putting together. There were more names I could have put in here. If I lowered the liquidity limit below 100 million, I could have put a lot more on. And then again, that's a testament to the small caps that have been underperforming, but we can't buy those illiquid names, which is one of the reasons why we use the ETFs for the indexes to get exposure. But Palantir still hanging in there. GDX on the edge, but still hanging in there. Corning, like another one on the edge, but still hanging in there, and that has earnings tomorrow. ARK, tight for 4 days now. Coinbase was above the 21, actually closed below it today on the 50-day with the reversal in Bitcoin, has earnings this week. Biotech, mild pullback today just to the 8 EMA. This is really the market leader here, home construction, ITB, and also XHB, up again on the day, making new recent highs. Axon pulling back on lower volume, earnings next week, still above the 21. KKR continues to show relative strength, also has earnings this week. Cheniere LNG bounced off the 21 last week. Generac holding up in a tight range for 2 weeks now. IoT, one of the strongest software stocks, going sideways for 2 weeks. That's about the best you can say about software names going sideways. Lantheus pulling back after two big up days on a favorable billing news for them, but not doing a whole lot over the last week and a half. Intuitive Surgical, gap up on earnings, gave back a little bit, still holding on to the 21. There's Bitcoin with the outside negative reversal today, but still above the 21. ServiceNow, Friday's candle was certainly okay after the big move up on earnings with big volume. Today's was a big disappointment. That's why we stopped out of it, breaking back through the pivot and ended up closing right below the 800 level. Keeping it on the list for now to see. There are about 5 or 6 stocks that are canaries in a coal mine that did break out on earnings that we're keeping an eye on. And that's one of them, to see if the market rights itself, if money flows back into them. Financials continue to hold up well. We own FAS, but we make the decisions on FAS based on the underlying, and the underlying is XLF. Never make your technical decisions on a derivative. That means a leveraged ETF. Always go with the underlying. Here's ITA, continues to be strong. This is aerospace and defense names. Here's a new name. ITA was also a new name. Here's CRS. Steel alloys, great reaction to earnings. Sales growth not really there, but the earnings growth is there and accelerating through 25 and 26. It's got ants in there twice, and inside day today, tight range, looking good. A couple of other steel stocks not looking so bad either. We added GE. This is another one of those big names that popped on earnings, pulled back for 2 days, and is right back near the pivot now. Starting to show relative strength over the last week and a half after going on an extremely strong run. And Sprouts Farmers Market got our attention over the weekend. Alex has been talking about this, and it's up nicely on earnings after hours. So this will go on the watch list for tomorrow, and that's the 21 over 21 list for this week. And with that, we'll wrap it. Remember, it's not how much you make in the market, it's how much you can keep. We'd like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION, and it summarizes our approach. The grow part, grow client assets in uptrends. The protection part, pull back during pullbacks and get the heck out of the way during bear markets, such as we saw in 2022 and for 3+ months last fall. Is this just the first leg down, very similar to what happened last July, August, September, October? We never know for sure. But every 10% move starts as a 3-4% move to the downside. We let the market take us out of our individual names, and then let the market will also take us out in our sector and index names if we keep breaking key levels. So that's why right now this declining 21 and rising 50-day moving average on the S&P 500 is really something we're paying close attention to, as well as the NASDAQ 100's inability to get back above its 50-day moving average. It is, however, holding the 100-day moving average, or the 20-week, which is also what held during some prior pullbacks. So keeping an eye on that as well. With that, we're going to wrap it for Monday, July 29th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.